Real estate investing and rental income. When you wake up tomorrow, picture your bank account growing without you having to do anything. Doesn't that sound like a dream? However, this dream known as real estate investing is a reality. Rental income may make this happen with the correct approach, giving you a 24/7 financial engine. The majority of people believe that real estate is difficult, dangerous, or expensive up front. Yet anyone can start small and build a portfolio that produces income that can change their life with the correct information. By the end of this video, you will understand exactly how to make rental revenue work for you, because I'm going to lay it all down step by step. Number 8, why real estate is a game changer. Because real estate combines 3 potent factors: cash flow, appreciation, and leverage. It is one of the most dependable and established ways to accumulate wealth over time. Rental income provides monthly cash flow while the property's value increases. The rise in a property's value over time, known as appreciation, generates equity that you can access at a later time. Using loans or mortgages, leverage enables you to manage substantial assets with comparatively little sums of money. These elements work together to produce an extraordinarily potent wealth-building machine. Real estate is also resilient. Rents and property values typically increase during inflationary times. In contrast to conventional savings accounts, which eventually lose value owing to inflation, real estate is a hedge and asset whose value and income both rise. Additionally, you have control over your investment because it is physical. You may enhance management, add facilities, or renovate to boost profits. Real estate is one of the best methods to become financially independent because of its stability, control, and development potential. Number 7, understanding rental income. The foundation of passive income in real estate is rental income. In essence, it's money you make by letting people use or reside on your land. However, not every rental revenue is made equal. The objective is to have a positive cash flow by making sure your rent surpasses all of your expenses, including mortgage payments, property taxes, insurance, upkeep, and sporadic repairs. In order to lower turnover, astute investors do more than just collect rent. They also assess market trends, optimize pricing, and hold on to great renters. The amount of money you can make might be affected by local demand, seasonal variations, and property upgrades. Small changes add up over time, transforming a single house into a potent cash-flowing asset. Investors can realize the full potential of their real estate portfolio by viewing rental income as a growing financial engine, rather than merely a source of income. Number 6, choosing the right property. Choosing the right property is critical to success. Location is the first and most important factor. Properties near schools, workplaces, shopping centers, or public transport tend to attract better tenants and maintain high occupancy rates. Beyond location, consider neighborhood growth trends, job market stability, and future infrastructure projects. These factors can dramatically affect both rental income and long-term property appreciation. Buying in the right area ensures your property will continue to generate income and grow in value over the years. Property type also matters. Single-family homes are simpler to manage but may offer slower cash flow. Multifamily units provide higher rental income, but come with more management responsibilities. Commercial properties may have long-term leases and high returns, but risk is concentrated in tenant stability. Experienced investors weigh these factors carefully, balancing potential income, management complexity, and long-term appreciation. The right choice today sets the foundation for consistent income and wealth growth decades into the future. Number 5, financing and leverage. Leverage is one of the most powerful tools in real estate investing. Instead of paying the full property price up front, investors can use loans or mortgages to control larger assets with less cash. This allows you to multiply potential profits because the property appreciates and generates income, while you've only invested a fraction of the total value. However, leverage is a double-edged sword. If the market dips, vacancies increase, or unexpected expenses arise, you're still responsible for loan payments, making careful planning and risk management essential. Number 4, risk management. Real estate isn't risk-free. Properties can sit vacant, require costly repairs, or lose value during market downturns. But effective risk management turns potential setbacks into manageable challenges. Insurance protects against natural disasters, liability claims, and property damage. An emergency fund ensures unexpected expenses don't derail your cash flow. Tenant screening minimizes risks of late payments or property damage. These strategies prevent small problems from becoming financial crises. Diversification is also key. Owning different types of properties in various locations spreads risk, so a downturn in one market doesn't wipe out your portfolio. Seasoned investors constantly monitor local markets, adjust rents, and maintain their properties to prevent income disruption. Number 3, tax benefits and incentives. One of the biggest advantages of real estate investing is taxes. Rental property owners can deduct mortgage interest, property taxes, insurance, repairs, and depreciation from taxable income. These deductions reduce your tax liability and increase overall profitability. This is money back in your pocket that you can reinvest to grow your portfolio faster. Additionally, tools like 1031 exchanges allow investors to defer capital gains taxes by reinvesting the proceeds from a sold property into a new one. Energy-efficient upgrades and government incentives can also reduce expenses or provide additional credits. Number 2, building long-term wealth. Real estate is a long-term wealth-building machine. Each property you own provides monthly rental income, while its value grows over time. As the mortgage is paid down, equity increases, giving you a tangible, valuable asset. Profits can be reinvested into more properties. Over time, this compounding of cash flow, appreciation, and reinvestment builds significant wealth, often enough to replace a lifetime of earning from a traditional career. Many millionaires have built their fortunes entirely through real estate. The key is consistency. Acquire properties steadily, maintain them well, optimize rental income, and reinvest profits. Number 1, how to get started. Getting started in real estate doesn't require millions. Begin with a single property and focus on learning the market, managing tenants, and understanding finances. Research local trends, network with other investors, and consider mentors or professional property managers to guide you. The first property teaches lessons that textbooks cannot, from cash flow management to handling unexpected repairs and tenant issues. Technology makes starting easier than ever. Tools like property calculators, market reports, and management software streamline operations and help you make informed decisions. Real estate isn't a get-rich-quick scheme. It's a get-rich-smart strategy. The sooner you start, the sooner your money starts working for you. If you want more tips on building passive income and creating wealth through real estate, hit that like button, subscribe, and join me on this journey to financial freedom. Don't wait, your future self will thank you.